How does the average person with no funding, safety net, or connections build a $2 billion real estate empire?
Believe it or not, you do not need money to get started.
What?
So I was just trying to pay my way through college. I never would have expected it to get me here.
That's amazing. So you are Robert Kiyosaki's real estate advisor. Watch as Ken reveals 4 essential steps to building a real estate empire.
Once you have the blueprint, it's just a matter of following it. It's the same blueprint that I've used for closing over 10,000 units.
Wow. Uncover the biggest myth keeping entrepreneurs from a big win.
Most people that buy real estate treat it like a stock. Buy low, sell high. Big mistake.
Really? And how to achieve financial freedom during the upcoming real estate wave.
There's going to be a massive opportunity in this industry. I've never seen anything like it.
But none of that matters if I don't have money. Sorry if I'm jumping the gun on you, but what's the next step?
It's fair, but you don't need money at this point.
I've come all the way to Arizona to discover how to start a profitable real estate business without spending a dime of my own. All right, Ken, before we dive into the backstory of your billion-dollar real estate empire, tell us a little bit about yourself, what you do, where we are today, especially for those who don't know a little bit about you.
Probably like a lot of people, I started with a 2-bedroom, 2-bath at Cashflow, and that was my first investment. I used my own money. Then I ran out.
So what year was that, by the way?
Gosh, that was 25, almost 30 years ago. So today,
where are we?
This is a property that we built in 2016, 202 units, and we leased it up in around 2019, and that's when we did our first cash out refi. So we built it for around 30 million. Today it's worth in the mid 40s.
30 mil. That's quite a large investment in a project. Did you come from some kind of a wealthy background? Mama, Papa wrote you a check?
No, of course not. So my mom was a hairdresser and my dad was in construction. I started in property management, so I started right out of college.
What made you think, you know what, I'm on the wrong side of the coin here?
Yeah, so free rent. I mean, it sounds simple, but you know, I had student loans. I wrestled in college, and one of my friends said, you know, would you like to manage this apartment building? Free rent. So I said, of course I can do that. You know, I've never done it before. So that was kind of me cutting my teeth on property management. And then the owner of that building one day showed up after I had filled it up and cleaned it up and done all the things that I would have done, because I grew up in construction too. And he's like, man, the place looks great and it's cash flowing and it's full. And that's when I realized I was on the wrong side of the desk. I said, oh, how do I learn what you know? And that's when I started to learn that a lot of people buy really good assets like that. They look for really good management. And once they get that, they don't sell them because they just cash flow over and over and over. And so that's when I decided to get my real estate license and kind of dig in.
What's the ratio of units here at the complex?
Yeah, we have 1, 2s, and 3 bedrooms. And typically the bulk of what you have are 2 bedrooms because that's the most popular floor plan.
Sweet spot.
The 3s kind of work for families and the 1s kind of work for people who are a little bit more on a budget.
Gotcha. Can we go check one out?
Yeah, let's go check it out.
Awesome. I'll follow you out. All right.
Yeah, so this is a 2-bedroom, 2-bath.
Oh, wow.
It's almost 1,100 square feet, and it rents for about $1,750.
Gotcha. Yeah, this is neat. I mean, I can see why people want to live here.
Yeah.
Right? You've got the incredible pool. You've got the gym, kind of everything you'd need for a good lifestyle here.
We have outdoor barbecues. We have a pet park. We have all kinds of stuff set up for people.
What's the passive income look like for a property like this in Phoenix?
So we've already refinanced this once, and we pulled equity out already. But right now, we got about $20 million in equity in this property if we sold it. But it kicks out somewhere around $35,000 to $40,000 a month
in
cash flow.
Cash flow after all expenses.
Yeah, so that would be income minus expenses. Expenses would be insurance, property taxes,
debt service,
labor. Oh yeah, everything, and then and debt service too, and then CapEx or capital expenditures. So that would be another thing. So roughly, call it $350,000 to $450,000, depending on the year of cash flow.
Walk us through your first deal. Anything that stands out, anything that we can learn from. I think a lot of us can think that the first deal is the hardest, and it may be, right? Or it could be the opposite. What was it like for you? What are some lessons from that?
There was a condominium converter out of Canada that came down and bought a 136-unit property, and I bought a 2-bedroom, 2-bath. They came to me because they wanted me to help them kind of take care of it from a management standpoint. But I also knew what the rents were because I'm in the property management business at the time. And they offered me one of the 2-bedroom, 2-baths at the time for $116,000. That's going way back. So it cash flowed, I think, between $100 and $200 a month. That was it.
Not bad.
But I only put like 30 grand down. So it was maybe a 7 or 8% cash on cash. So it made sense as long as I kept it full. So that was my very first deal. I did that a couple times, and then I ran out of cash, as you do.
What was the biggest learning curve when you were first starting out? What did you figure out that you need to learn pretty quick? And
well, I think everybody has a bias, right, on how they grow up and what they learn from their parents or friends and family. For me, it was scarcity mindset. You know, my parents grew up super poor. When they said we can't afford it, they meant it. I grew up shopping at the thrift stores for clothes for school and those kinds of things. And so to go from that to being able to understand how money works and then to buy real estate deals, it's a very different mindset.
how do you translate that into analyzing a deal early on?
The very first thing is just, do I belong in this room? You know, they're a lot smarter around money. I didn't grow up about money. You know, the same kind of things I think a lot of people have. You really have to rewire your brain. And then you realize it's just math. Then it just becomes easier. I think once you start to underwrite a lot of deals, you start to look at a lot of deals, you start to see a lot of deals, and you have thousands of conversations, you start to realize that there are a lot of things that start to be kind of consistent from project to project to project. At the end of the day, if the math doesn't work, the deal should not.
All right, let's say I want to get into real estate. I don't have any money. That's the big dilemma, right, guys? Give us the step-by-step blueprint for getting started.
You have to understand what a deal is. So that might require a book, it might require a lot of YouTube videos, it might require a lot of studies. So the thing is you won't even know what you're looking at if you get it. So the first thing is education. You know, read, consume everything you can, and at least understand kind of the numbers, the vernacular, and what it is. That's number one, because deals start in the mind, and they start with what you see.
What about step 2, step 3?
So step 2, of course, is then whatever that is. Let's say it's Airbnb. Then the next thing you want to do is find what are the best markets where Airbnbs are the highest occupied. So market is way more important than property. So that's the second thing.
But none of that matters if I don't have money. Sorry if I'm jumping the gun on you, but what's the next step?
It's fair, but you don't need money at this point, because that's the mistake. People think I need money before I start. This is just education at this point. You do not need money because you don't know what you're going to buy. So then the third thing is to identify the property. Okay, I found this 5-bedroom house. It would be a great Airbnb, and in an area that doesn't have any. Now you actually have something that you can sink your teeth into. It's 500 grand. It's going to be 50 grand to furnish it. I need 550 grand. Now you have something. You can actually go take a look at what the rents are. You can go see what the expenses are. And now you can actually run the numbers. At this point, you don't need money. It's pure education. So until you actually physically have something in your hand that you can look at that actually has math behind it, you don't know. Now at that point, it's just a mix of debt and equity, right? So you can bring an investor on and say, this is a market that's highly underserved. I have a deal that I'm about ready to put into escrow. You don't even have to have it in escrow, but you could. My goal is to put 50 grand in furniture in here. I've already found somebody to do that. And I think that it's going to produce about $15,000 to $20,000 gross a month. That's the deal. So you go out and find it. And what you do is you get the investor the largest percentage, you go get debt, and then you get what's called carried interest. So you haven't done a thing. It's just 100% research at this point. So there's so many ways to do this, and it's all in the deal. So that's why you always are looking for deals at all times. I look at hundreds of deals a month, and I probably really seriously only look at less than 5 or 6 out of those hundreds. Just delete, 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 and then, oh, this one looks interesting. And then you make calls. Does this work? What are the rents? What are the expenses? What's the interest rate? What's the cost of money? And then again, it just boils down to math. It either cash flows or it doesn't.
All right, so this is your market rate asset. You've also got age-restricted properties. Can we go check one out?
Yeah,
which one is it?
It's Fountain of Sun City. You guys are gonna love this property. You have to be 55 or older to move in.
How long have you had it?
I've owned it almost 20 years.
Nice, let's go check it out. All right, welcome to the 55 plus age-restricted property, right?
Fountain of Sun City.
What made you get into this asset class as opposed to market rate, which is open right to everybody? How is it different as far as management
very
as
different.
well?
This property, it's 182 units. Last year had 42 people move out. That's all. So what's normal is around 60 to 70% turnover. then all the costs go down.
Wow.
You know, think about the maintenance guys, the wear and tear on the whole property goes down as a result of low turnover.
Did you know that going in? Is that was part of the
No,
plan?
no, I knew that seniors didn't move. They're not like moving for jobs or anything. They're coming for community. But we have a full-time director of activities, and we have a van that
Yeah,
actually shuttles them around.
Okay.
We're not assisted care.
I was going to say, that sounds like adult care
It's
facility.
active living.
That's pretty cool.
Every real estate empire starts with a single investment, then another, until you end up with a $2 billion portfolio like Ken McElroy. But without the right investments in place, your business gets shaky fast. That's where NetSuite by Oracle comes in. It's the #1 cloud financial system trusted by over 40,000 businesses. Instead of juggling spreadsheets, their all-in-one financial system tracks everything for your business from cash flow to inventory, all in real time so you can make decisions with confidence, not chance. Because scaling a business is hard enough, you shouldn't have to add or pull out a block while blindfolded. That's why if I had to start and grow a business from scratch, NetSuite is what I'd use to get the insights I needed. So don't gamble with fragile systems. Go with the tool that gives you the best opportunity to grow. And speaking of opportunity, you can learn more and download their CFO's guides to AI and machine learning at netsuite.com/UpFlip. The guide is free to you at netsuite.com/UpFlip. netsuite.com/UpFlip.
All right, guys, blitz time with Ken. Ken, you ready?
Yeah.
Let's get through this. Top book every real estate investor should read.
Oh, ABCs of real estate investing. My book. Come on, it's 20 years. Perfect, great book.
There you go. Favorite city to invest in real estate right now.
So I like Dallas. I like North Dallas.
Okay. One trait every successful investor should have.
Sales skills.
That's important. Is now a buyer's market or a seller's market? I know this is market specific, so pick maybe a area of the country.
I think it's a buyer's market.
Overall.
Yep.
Okay. What's the most unusual place you've closed a deal?
In a car driving down the freeway.
If you could instantly master, by the way, we're not.
Oh, that's true.
Yeah, I know he's so used to his
I am.
podcast, he's
I am.
speaking into these
Jesus.
mics. If you could instantly master one new skill, not real estate related, what would it be?
Intuition.
Intuition. Couple more. How do I find genuine mentors and people to work with?
Conferences, anybody that's doing personal development, my experience has been just go walk up to them and ask them what they do and ask them if you can have some of their time. That's what I've done my whole life.
That's awesome. Last one. What's the best way to use your first property to leverage future real estate purchases?
Well, that's a great collateral, right? So that's what the bank wants. And so it's easy to put a line of credit on it and then pull that money out.
Awesome. That's it. So Ken, when you look at new opportunities, when you're evaluating properties, what things are you looking for and any red flags?
It's probably the opposite of what most people do.
Yeah.
Like I'm looking for very delinquent people. I'm looking for a lot of turnover. When people move out a lot, typically you have cash flow that goes like this or revenue that goes like this. I'm looking for big disparity between rents. So let's say a 2-bedroom would be $1,700 and then you might have another one that's $1,200. So you start to look at what's called loss to lease inside of the rent roll. And then obviously you look at late fees. So late fees traditionally are income, but it also is an indicator that you actually have a tenant profile in there that you might not want.
So all the red flags technically become the opportunity points, right?
So.
In a way.
Yeah, right. And they're all sitting there in the financial statement.
From one property to 10,000 doors, you guys. 10,000 doors is a serious number. Give us a sense of how quickly you scaled and any important milestones in that journey.
Well, not quick at all. So first of all.
Yeah, it's overnight 20-year success, right?
Yeah, so obviously the first 5 years was all single families and multi-unit stuff, right? And then you start to get the bigger deals. So the first milestone was 1,000 units. That was my first in my head milestone. Then the next milestone, believe it or not, was 4,000. Now why 4,000? I don't know.
From 1 to 4.
Yeah, but that was kind of my stretch goal. And then after that, it was 10,000. And we actually hit 10,000 quite a while ago. So probably in that first 15 years, we hit 10,000, which was slow, methodical, and strategic. Then we went up to a little bit higher, and then we kind of came back. We started exiting some of the older projects and recycling that money into newer, more of the Class A, high-end projects.
Do you think coming from a humble background, Ken, was a disadvantage or an advantage?
No, for
What do you say to
sure.
that?
Massive advantage. I know what it's like not to have.
Yeah.
So when you
Perspective.
do, you have a different perspective.
And you spoke about 3 different types of people. Can you elaborate on that a little bit?
We call them the W-2s, which are the folks that work for a paycheck, which is totally fine.
Yep.
Kind of the
9 to
entrepreneur.
6, yeah.
Yeah, the entrepreneur. And then I also call the last one, lucky sperm or the affluent. And I find that a lot of times, especially now I'm in those circles, they have the toughest time. So,
In what way?
well,
Sounds ironic.
I know.
You know?
It is.
Affluent,
Well,
have access to everything you possibly
you would think so. But material things, I find that if you try to put cars and jets and houses and all that stuff kind of in front of you, and that's who you are, then if that you don't have that stuff, then you're not very happy.
What trends are you seeing that we should be watching carefully?
It's affordability, tiny home, it's immigration. The biggest one, which we're standing right in the middle of, is the aging baby boomers. Now, not all of them are renting, but they're all moving around, they're all retiring, and so that's a huge one. And what I found is that there's a lot of people that are buying RVs, even older ones, because of affordability. And of course, the tiny home communities. So those are really starting to be popular because people don't want to adjust their lifestyle too much. And the one thing they can massively adjust is their monthly payment.
Housing costs, yeah.
And so you start to look for these bubbles, and they're everywhere. And so all you got to do is kind of keep your eye out. Like, what do people want?
So you are Robert Kiyosaki's real estate advisor.
Yes.
Really exciting. I've been a fan of his since I was a little kid, reading that book, right? Rich Dad, Poor Dad. How did that amazing partnership come about, and what are some of the biggest achievements together?
When you start to raise money, you don't know always who everybody is until somebody tells you, right? When Rich Dad, Poor Dad had come out, I had never read it. Then I realized, oh, this is the guy who wrote a book. I better go grab it. So I went to the bookstore, bought the book, read it before I met him the next day. Now I'm able to chat with him and talk to him about things in the book. One of which is your property manager is the most important person on your team, which was perfect because that's who I was. And so we started talking about that, and he said, why don't you come to one of my seminars? And I said, well, what is that? He said, well, I teach. I said, oh, okay. So I went to a seminar, saw he had several hundred people in the room. He's teaching all these investing concepts and things, and I enjoyed it. And I went and spoke at that conference, and we became friends. They ended up investing in the deal that we had in Tucson, slowly testing the waters. So the biggest achievement was Robert pulled me aside and he said, you got to tell people about what you do. And I'm like, why would I do that? He's like, you should write a book. I'm like, why would I do that? And so he forced me to write a book. And I say that in a good way, to go out and teach with him and speak with him and go all over the world now, kind of teaching financial freedom. So I had been doing that for years. And then when the pandemic hit, I had all that knowledge. I had never really done much with it. And so that's when I started doing the YouTube videos.
Yeah, that's awesome. Ken McElroy built his billion-dollar real estate empire brick by brick. So if you guys are inspired to lay down your own foundation, the UpFlip Academy can help get you there in 10 days, guaranteed. If you know what you're looking to start or are still looking for that beautiful, wonderful business idea, hit that link in the description below to start your own business in the next 10 days, guaranteed. Well, let's go check out the leasing office.
And the other courtyard.
Yeah, meet the ladies running this place, right?
Yeah, they're the ones that make it happen.
Because they're doing an amazing job.
They are.
So shout out to you. Let's go.
So I've noticed so far we looked at residential properties. Is that the only asset class you invest in, and why?
I like the ability to immediately fix cash flow on residential. So what I mean by that is if I have a bunch of people that move out of, let's say, a student property all at the same time, let's say at the end of school, I could get all those filled up really quickly, like in a 30-day period. Even if it's at a discount rent or giving the resident some kind of concession or something like that. So multifamily and residential primarily do extremely well based on the top line rent or occupancy. When you are in, let's say, a storage facility, you have to find that person that's looking to store stuff. If you're looking for an office building, you have to find a business owner, let's say, wants to move their office. Much harder task. Yeah. Where a property like this, we just have to have a market rate apartment building that people find affordable.
Yeah, the housing need is far greater than
the other asset classes. Yeah. So I like that a lot more than the others.
What are some top niches for beginners in real estate specifically? What do you think?
Well, I think what most people are looking for is something they can do with no money. So wholesaling is obviously something that's really quite easy. That's finding somebody that wants to sell something and then selling it to a wholesaler. So you're just basically a middleman taking a commission. So I've seen that also done with Airbnb. So let's say an Airbnb person could come rent one of these apartments from me for $1,200, and then they go stick it out on Airbnb, and they actually find somebody that rents it for $2,000.
If you let them.
If you let them. There's a lot of single owners that will do that. So because they're fine, okay, do your thing. You know, rent it from me. I'm good because I'm getting my rent.
Yeah.
But then they're renting it more like a hotel, and then you get all that money in between. Now, it really doesn't really work in an apartment building like this,
right,
but it definitely could work in a duplex or a single family house or something like that, where you can come in and get a low rent and then create a whole nother business on top of that. Another one that I really like is you can get land ready for the next person. So you can tie up a piece of land and just getting it ready to build on, maybe whatever it
clearing it, grading it.
You don't even actually do that. It's mostly approvals at the city or the county.
So paperwork stuff.
Paperwork stuff. So in other words, a vacant piece of land is worth, let's say, $100,000. But a vacant piece of land that's approved to build 2 houses on it is worth a lot more.
That's a
and
good
so
point.
what you do is you take the land and you get all that work done, which could take 3 months, could take a year. It's just slowly chipping away. And then what you do is you bring it to a custom home builder or an investor and say, this is a fully approved building site for you, and then you mark it up.
The beautiful thing about that is if you have a good land use consultant partner,
Correct.
lock in a deal with 6 months, take it to your land use consultant. He does all the work.
Correct.
And then together you get your payback.
Because if we're going to build an apartment building, our risk is all that land carry and them not approving the apartments.
Yes.
So if we can get somebody that delivers that to us, they get paid for the difference between what they tied the land up and what we sell it for.
Wow. All right. Well, I'm excited to see your office because that's where it's basically the hub of operation, right?
Yes, it is.
So can you take us there? We'll follow you.
100%. I'd be happy to.
All right. Here's your main office, right? Other investors focus a lot on capital gains, speculation, timing the market, which is challenging to do sometimes. But here at MC, you specifically focus on cash flow. So let's talk about why you think that's the best strategy.
Well, I think, first of all, when you're younger, I get it. Like, when you buy something and it goes up in price, you want that money, especially when you're broke. So I would say in my early 20s and early 30s, that's exactly what I would do. And then I realized that I was just on a treadmill. I was basically just trying to figure out timing the market. I was trying to figure out how do I take something that's low in value and sell it for more in value. That's when I realized that cash flow was a better strategy, which means that you don't always have access to that equity. But if you buy things correctly for cash flow, then of course that's passive income. You're not reliant on a commission or a next job or a paycheck or anything. So now all of a sudden you're in an incredibly strong position because you don't have to do deals.
Right.
You have cash flow coming in. You now can really do the right deals at the right time. So everybody's aligned.
What do you think is the biggest misconception people have about real estate?
One, that it's easy. It's not quick. It's not get rich quick at all. It's a long-term strategy. And I think the biggest obstacle that people hang their hat on is that they need their own money.
That's true.
And that's not at all.
If I don't have any, real estate's not for me, essentially.
I totally get that, but I think that kind of holds people back. It's kind of like, I'm not going to the gym because I don't have the time.
So what was the biggest loss for you in your career? And we're talking, 30, 40 years since you've been in this industry?
In the early 2000s. I actually did a lot of these, and they're extremely profitable, but really it's one big flip. So in this particular case, it was a 300-unit building. We bought it for $30 million, and the goal was to sell it for $60. Now, it cost about $20,000 to $40,000 per place for renovations and sales and marketing and all that kind of stuff. That leaves about $50,000 per unit of profit. So 50,000 times 300 is about a $15 million profit. So on paper, it sounded great.
Yeah, it does.
Well, it was gone because what happened was in 2007, 2008, what was called the takeout financing just stopped because the banks were wobbly during that time. I was relying on that bank to give you money to buy my property. When that stopped, the property stopped.
Everything stopped.
And when sales stop, there's no more money.
All right, Ken McElroy's success proves that it only takes one business idea to completely change your life. So that's why we've spent over 100 hours compiling a list of 137 most profitable businesses that you guys can start today. Once you see what's inside, you'll wonder, why in the world are we giving it away for free? So don't wait, get yourself a free copy by clicking the link in the description. Cool, so this is your studio.
Yeah, it's nice, huh?
Amazing. When did you
Yeah.
get this set up, Ken?
Oh, we did it during COVID. I was at home and I'm like, I'm going out of my mind.
Itching for a project?
Yeah, I had time for the first time in a long time, and I decided to start teaching.
What's one mindset shift that was critical to your success?
I think one of the things that hit me square in the eyes was when somebody did what's called be, do, have. And so be, do, have is quite simple. Most people focus on have. They want this, they want a nice house, they want a nice car, they want this, they want a great relationship. And so they start to do things. But really, the key and the success of all of it is, who are you gonna be?
Yeah.
So once I started to focus on what I needed to be, I wanted to be a good investor, I wanted to be a good father, I wanted to be a good husband, I wanted to, all those things, I started taking ownership of that. Then, of course, once you understand who you wanna be, then you know what to do.
Wow,
And
well said.
so that's exactly probably the biggest shift for me.
What's the biggest life lesson that real estate specifically has taught you, Ken?
That financial freedom does exist. And there's something to be said about not having the stress or anxiety of where's money coming from. In the beginning, it's just kind of a theory and a want, and something that you're trying to aspire to. But then when it happens, when you actually have so much money coming in passively and you're in 100% control of it, you don't have to do a deal, you don't have to sell anything, because what you've already done, all the seeds you've planted are already producing fruit. Now you're in a situation where you can teach, like I'm doing now. You can do philanthropy. You can take a week off, a month off. You can do whatever you want. That's full financial freedom. And also, I didn't have everything figured out. I think that's important to know. Everything I thought I was going to do from a young age is completely different. But I always had a bit of a target. I always had something that I wanted. I always had something out in front of me.
In this industry, what are typical profit margins and where's your portfolio at?
Yeah,
Let's
so
understand.
we're really, really high. So it depends on the kind of money you use, believe it or not. So if you use private equity, family office, or let's say institutional capital, they're gonna want to be in the teens as far as a return. So 14, 15, 16, obviously even more so. There's a very different kind of money that invests in this kind of a property. So the reason I've been able to own this for 21 years is because I have very patient money. I have high net worth money. Now, if I would have bought this with, let's say, a group out of New York, this would have been no longer than a 5-year hold. I would have had to sell this property in 2012, 2013. So I would have missed out on all that profit and the tax advantages and all that kind of stuff. So a lot of real estate like this depends on where you source your money.
Can you even say there's a profit margin? A business generates 20% profits. Is this 30? Is this 50? Or are we talking more or less?
Well, that's part of the reason I do the YouTube channel is I like to talk about infinite returns. So people understand an infinite return. If I get 100 grand from you, and I give it back to you in 5 years, and you're still an owner, and you're still getting cash flow,
That's the infinite return.
That's infinite.
You've talked about the importance of using other people's money, right? What's the term there?
Yeah, OPM.
OPM, other people's
Yeah.
money. So the big question that I have is what are some biggest mistakes that entrepreneurs make when it comes to leveraging debt, and how do we avoid those pitfalls?
Yeah, it's a great question. So first of all, OPM is like you could give me money in the form of equity or in the form of debt. It's really your choice. It's just money. So it's important to know, even though it's going to be categorized, it's just priced differently. So what happens, what kills every real estate investor or every syndicator is the cost of debt or too heavily leveraged. I've seen people do really what they call hard money, let's say 8, 9, 10, 12, 14%, and they have really short timelines, and then things don't work out. And then all of a sudden, that property becomes the property of the person who lent the money.
Right.
When you borrow debt, you have to make sure that you're doing it at a prudent rate, and of course, back to the cash flow thing. If you're borrowing debt fixed and it cash flows, you're gonna be fine. If you're borrowing debt floating, you probably aren't going to be. So that's exactly what got everybody in trouble, is they didn't get fixed rate debt. So the floating debt goes up when the Fed increased rates, and that killed the deal.
Why would you get a floating rate on a deal size of 30, 40, even 5, 6 million? Are you saying that that was a common mistake entrepreneurs made?
That's exactly what's killing people right now. On a construction loan like this, you can't get fixed rate. It's floating because there's no collateral.
The construction phase.
Yeah, the construction phase, you typically have floating debt. For us, we love fixed rate. Like, I want to know what my payment's going to be in 4, 5, 6 years from now. That's power, that's control. I can't tell you how many deals people bought with a floating rate, and they're getting crushed right now. And so the way to do it, the way to increase your certainty on the asset or the real estate itself, is to know your mortgage payment in year 1, 2, 3, 4, 5, 6.
Still thinking you need a fortune to get started in real estate? In episode 152, Thatch breaks down how he built an $800,000 a month portfolio as an immigrant with 0 to his name. Thank you for watching. Take a second to like and subscribe, and we'll see you guys next time.